Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We like to kind of discuss what's going on with the mortgage rates on a daily basis, whether it might be impacted by economic calendar or headline news or geopolitical, maybe a combination of them. Sometimes even the market sentiment changes, where good news is now bad news and could be a little confusing out there. So we try to give the explanation behind what's going on and hopefully give you a little bit more idea. So if you're following along and get a little confused, hopefully these videos will help you to guide you a little bit. A little bit about myself is my name is Mike. I do work with the National Lender. We do loans in all 50 states. So if we can help you guys, if you're looking to get pre-approved and buy property and finance it, or if you're looking to refinance, we'd love to be able to assist you with either of those components. But more than that, we'd like to be a resource for you. So if you guys got questions, please reach out. We're here to help you guys out. So we'll look to get the answers for you guys. Without any further ado, we'll just jump right into it. We'll start off with the economic calendar. I'm going to go to a different page for the economic calendar today, just because it seems, this one's kind of limited. There's a little bit more information on this one, primarily the PCE. It doesn't. This one only shows the core PCE year over year, where the other one breaks it down from the headline news and the month over month and stuff. So. Challenger layouts. These are just kind of announced layouts, and as you can see here, is a pretty big increase. So we're going from like 15 million to 21 million basically in terms of announced layouts. 6 million announced layouts coming ahead here, which is well, that's a lot. So something we'll have to kind of keep our eyes on. Now tomorrow we'll get the jobs data from the Bureau of Labor Statistics. That would be the big one for in terms of jobs. So, but today's a big day too, which is we got the personal consumption expenditure, which is the Fed's favorite gauge for inflation. They look at the core PCE, or they also call that real inflation. So we'll touch on that here in a second. But first, let's take a look at the personal income for the month of February. So in January is basically unchanged. Forecast called for a 0.5% increase, and it came in as expected. We also got consumer spending for the month of February, so we got the other hand. So January, I had a pretty big increase. So like nobody income went up, however their spending jumped up 2.1% in January. However, forecast come for a 0.5% increase, like the personal income, but it came in a little bit shyer. So people spent a little less money in the month of February as a result. So as I mentioned, we talked about the PCE. We'll start off with the month over month at the headline news. So this is for the month of February. So in January it went up 0.6%, and it continued that same trend in the month of February to 0.6%. So its year over year went from 6.1% to 6.4%. Now, when you take out food and energy, exclude those from the calculations, you get the core, and those are two variables that we cannot control. So therefore, that's why this is more important, because it gives us our base. And why the Fed looks at this is the Fed's favorite gauge for inflation. So it's month over month went from 0.5% in January with a forecast of 0.4% in February, and came in expectations at 0.4%. Its year over year went from 5.2% with expectations to 5.5% to 5.4%. So it didn't quite meet expectations, but it did increase a little bit here at 5.4%. Now, the second layer of our this week of the jobs data, we got the weekly jobless claims here. It went up. Sorry, this right here actually. Sorry about that. This was actually slightly revised higher. It went from 187K to 188. This is probably the first time I think since the pandemic we saw under 200, if I recall correctly. So that was obviously good news. Forecast was supposed to be uptick to 197. However, it came in a little bit hotter at 202. So jobs worsened by 202,000 this past week. More people applied for unemployment. Now, last but not least, we got the Chicago PMI. This is for the month of March. This is a gauge of the business and manufacturing activity around the Chicago region. Anything above 50 is expansion. And as we see here, we had a 56.3 back in February. Forecast is supposed to be a slight uptick to 57, and it really heated up. So caliente in Chicago in the month of March at 62.9. So Chicago really heated up in the month of March. So that's obviously good news for them. investors are kind of looking. We're at month or at quarter end now because it's March 31st today. We're at quarter end, and they're kind of looking back. Of course, we had stock market didn't do so well. For the most part, they lost. It's a losing quarter for the first time since the pandemic first began. So they're looking at those where the pricing is at those points. We're also looking at the high inflation data. We're looking at, of course, the geopolitical, like the Ukraine-Russia war here. The lockdowns with China. So they're looking at many different variables right now. But one thing that came out today was Biden decided he's going to release about 31% of our oil reserves. Not sure, just to try to get the price of oil come down. So prices did come down a little bit on that. So hopefully that might lead some. How much of it, I just don't know. It's we consume so much here that I don't know how much of a dent that will really help us. But in any regards, whether it's good news or bad news, that's kind of the tactic that they are announcing today. So stocks are in negative territory. However, mortgage-backed securities were kind of more or less unchanged. We started off a little higher, as you can see here, but came down a little bit. We're down for the day, but we're still up from compared to yesterday. Right now, we're up about 3 basis points. We've been kind of averaging most of this morning about up 5 basis points. Um, so here's the kind of volatility. We're up here, and we kind of came down and over since about 7 o'clock this morning Pacific Standard Time. We've been kind of sideways pattern for the most part, as you can see here. But and let's take a look at yields. Yields are also down a bit too. Yields are down to about 2.32. For the most part, we're up around 2.35 yesterday, so we're down a little bit, which is good news as well, adding a little less pressure in the mortgage-backed securities. And so that's pretty much it. Mortgage rates are about the same as yesterday where we closed. We're unchanged. Last but not least, we'll touch on what's the average rate going in the conforming loan limit. The 30-year now dipped down to 4.79, and then 15-year fix is at 4.15. So if you recall, earlier in the week we're at 4.95 on the 30-year and 4.22 on the 15-year. So they've dipped down a little bit over these last few days here, which is great news for those who are looking to refinance or buy. So that's helping a little bit with their pricing. So if you haven't locked in, this is good news. Now, tomorrow could be a big day because we have the Bureau of Labor Statistics jobs data. That could impact market a bit as well. So just be careful out there. But meanwhile, again, today is not a great day, but it's not a bad day either. We didn't drop or anything. So we're basically in unchanged territory. So market is probably preparing a little bit for tomorrow. I figured the PCE, if it came in much hotter, probably would have hurt us. It came in less than expectations, so that probably is what's kind of helping us a little bit, that it didn't come up as high as we did. So that's probably, if it came in as high or hotter, probably would see the market, a big sell-off in the mortgage-backed securities here. All right, folks. If you guys I want to reiterate, if you guys got questions or anything we can help you guys out with, please reach out to us. We're here to help you guys out. If you guys like these videos, help us out by sharing and liking the videos. We greatly appreciate you folks, and subscribe. We are here to help you guys out. So you guys have a great rest of your day. Thanks so much for watching. I look forward to seeing you guys in tomorrow's video. Bye-bye.